Alrighty, I think we're good. Let me go ahead and get all of this sent out. Perfect. We are set and get all of this. Cool. All right, we're just gonna give it a quick second before just to let the notifications go out, just to let people know we are live. And yeah, we're gonna kind of take a look at what's going on today. We're gonna start this week off with the stream. You guys know I've been wanting to stream a little bit more on the public channel. So here we are. Welcome to anyone who is rewatching this thing after the stream has already ended. I feel like I always forget to tell you guys hello. Simon Riddick says to you too, my friend. But again, um, yeah, like I said, I always forget to welcome all the people who are going to be rewatching this thing. So welcome to YouTube. But what's up, everyone? So we're going to give it again another maybe 30 seconds or so, and then we're just going to take a look at what's going on in the market. I'm going to kind of just give my outlook on what's going on right now, as there's just a lot to kind of dissect. Then we're going to talk about some technical analysis, and then we're going to talk about some on-chain metrics, and we're going to call it a close, aiming for about 30 to 45 minutes on this one. Okay. So yeah, no, I know. I got a couple ETH. I was so happy to get them at this price. But and you guys know I don't dollar cost average. So me being happy to dollar cost average is weird. But okay, so I think we're all good. Let's go ahead and let's get started. Welcome in everyone. And again, welcome in to the people who have just joined. But let's go ahead. We're gonna start off with why all this shit is happening in the first place. And then we're gonna kind of go into a little bit further into my thoughts of what the next couple of days consist of. Okay. So first and foremost, of course, what we have to, pay the closest amount of attention to is that what we're seeing in the market is no normal retracement, right? This is no normal pullback. This is a macro environmentally encouraged pullback, right? There are things going on in the environment, not the environment like, space, more of the world, right? There are things going around the world that are starting to cause the market's tension. They're starting to cause the market's nerves and worry. Right. And as that worry does accrue, as that worry does build up, and as people do get nervous, they are likely going to take their money out of what is considered to be more risky assets, which is the reason you can see here that many of our altcoins are absolutely tanking. You can see Bitcoin dominance is on the run. We're seeing it work its way up a little bit, just going to show that although Bitcoin is falling, people are taking less money out of taking less money out of the Bitcoin itself and putting money into or taking money, sorry, out of altcoins, putting it into Bitcoin. You see Bitcoin dominance growing. So it's kind of showing the little bit of a hierarchy, right? Your Bitcoin is still, it sucks. I mean, it's still tanking, but it's doing better than say something like ETH, but ETH is doing better than something like say, Link or Matic or something of that nature. Okay. Now, I'm like licking my lips at these prices at this point. I am under the belief that we are getting into the territory of saying, okay, this shit may be a little while, right? I mean, we may be looking at this for quite some time, but it is what it is, right? We kind of just have to adjust, we have to adapt, and we just have to go with the flow, right? I think all of us who get into crypto know the risks. We know that a 55, 60, 70% pullback in the entire market is always on the table, and now that we're in it, I can confidently say that I do believe we are past halfway of this fall, one way or another. I think we could be right at the very bottom very soon. But even if we're not at the very bottom very soon, I would say we're at the last 25, 30% likely. And so considering the fact that we are, seeing moderators, also if you see any links or anything posted in the chat, please delete them. But yeah, again, like I said, I am under the belief that we are getting towards the end of this fall, whether it be, not necessarily time wise, but percentage wise, whether it looks something like, a rounding off or something like that. I am under the belief that that comes relatively soon. I don't think this downward trajectory continues much longer. And so for that reason, I am getting excited because one way or another, I think we are going to see times of accumulation relatively soon here. And I am under the belief that the growth will come sooner than later. And that's all that I look for. Because realistically, people think that this shit just started. I mean, we have been in this honestly for almost 3 months now at this point, right? And so just because it's now just starting to really ramp up, usually when it just starts to ramp up, that's a good sign when we're about to start to bottom out soon. So considering the fact that I am under the belief that we are getting relatively close to the bottom of this thing, that does excite me because we are finding support at levels that I think will be able to allow us to see, 250, 200, 300% growth. Un saludo, amigo. What's up, homie? Anyway, so one way or another, if this does continue down, I am under the belief that it's going to bottom out relatively soon. Percentage wise, could be another 50% from here, and I'm going to talk about what that means. But time wise, I don't really see it lasting at this downward trajectory much longer. Okay, so let's kind of talk about again what exactly is going on, and then let's go shift a little bit further into how do we go about this, what does it mean, etc. Okay, so there's a couple things going on environmentally, more of a macro scale, that are causing a lot of this shit, right? Because it's not just crypto, right? That's something people need to get a grip on, right? If you look at something like, let's look at the SP. Oh, no, I'm totally tripping. There we go. Let's just go here. Then you look at something like the SPDR. Okay, this is a good way to kind of track what's going on in the stock market. I mean, this thing is having one of the it's probably about the nastiest week it's had ever since the I always try to avoid saying this word. The virus. Let's call it right. The virus dump. Right. One of the nastiest weeks. Now, macro's perspective, this isn't that bad, which is kind of worrying in a way. It's definitely been worse, but overall, the entire everything is dumping. Everything. And now I know this definitely does not look as bad as Bitcoin, but trust me, in the terms of the stock market, a 2% growth in one day is like the best day ever, and a 1% loss in a day is like absolute chaos. Okay, so just because it's less volatile, this is ugly. Okay, for the stock market. So everything is falling. Okay, everything is falling right now. Now, there's a couple things. Of course, we do have the threat. Right now, Russia is starting to kind of engage some of its troops. There's a standoff going on over in Ukraine. I think we've seen things like this before. I, of course, have no crystal ball and can't tell the future, but I don't think this is going to resort to a World War III. I don't really think that anything too significant is going to happen here. It kind of just depends on what goes on. But I think that over the last years, over the last 10, 15 years, we've definitely done a good job of avoiding things that could really transpire into some type of nuclear war or something. I'm not really too concerned with how this plays out. Or how this goes. I think it's going to play out fine one way or another. But of course, the threat of it and the fact that it is on the table is definitely something that has people a little bit shaken up. We have the prime minister going through some stuff. I don't necessarily think this is super detrimental, but of course there is just it's added shit, of course, and when you add shit on top of shit, you just it's more shit, right? So this is the biggest thing, of course, in crypto. Federal Reserve policymakers are expected to signal their first interest rate hike since 2018, paving the way for a March move at the U.S. central bank tries to extinguish red hot inflation. So with this one, right, I'm very curious to see what happens tomorrow. My recommendation and my non-financial advice suggestion is to not really do anything in preparation for this, okay? Because this is going to be tomorrow, I believe. The thing that I've noticed is sometimes, no matter what they say, you buying and trading and doing all this shit based off of events. It's not it's very what's the word it's very detrimental to your mental health. Okay, like whenever you start to try to buy things based off of an event like the Fed coming out to talk, it starts to just do shit sometimes that it doesn't make much sense. And so my personal recommendation is that I'm just going to sit back and watch and see what they say and how the market reacts before I do anything at all. Okay, because if you say, because my mentality here, right, I think what they're saying, this is what I think. I think that the Fed sees what they've done already at this point and know that if they keep adding fuel to the fire, it's just going to get much, much, much worse. I think if they come out tomorrow and say something really bad, like we're gonna get even more hawkish on this. We're gonna go even further, and we're gonna, spike up freaking interest rates just as much as we possibly can. And they start getting real, like crazy as shit. Yeah, likelihood is we're gonna see this thing just absolutely tank. I mean, we're gonna see markets absolutely get crushed, right? Because at this point, I believe that I honestly believe that the markets, even the stock market and Bitcoin, crypto, whatever, I think everything is already starting and beginning to factor in the interest rate hikes. I believe that we see this all the time. We get bad news, we tank, and as the things, whatever the bad news was about, once it starts to get implemented, we usually start to kind of go sideways and grow. And say if the first interest rate hike comes out, sure, we might dump a little bit, but we have a tendency to recover from bad things as they're happening if we are able to get the news about them. And it's very similar to whenever we're seeing, this and then some really great news comes out, right? Boom, great news comes out that Ada Cardano summit is coming around and there should be great news. And everyone's excited about the summit. And then the summit starts to happen and we start to fall, right? There's a very inverse correlation with good news and how the market reacts and bad news and how the market reacts. And I am under the belief that we are already factoring in a lot of the interest rate hikes. And so that's why I'm under the belief that when we think, okay, it could be a year long bear market, right? I think that there's the possibility that we see the bottom. And sure, does it take a year before we see before we see the all-time highs again? Sure, it could. I don't know. But I think it's less of the idea that we're going to be falling for that long, as we are already starting to so steeply decline in so many markets. I think that we're factoring this in already, which is great for us because it tells us that we realistically might might be, the day that we start to see some recovery might be relatively soon. Okay, just my opinion. So if I was them, what I would go ahead and assume they would do, unless they want this shit to keep getting really bad, now that they've seen so many markets getting destroyed and so many pensions getting hurt, is I would assume that they're going to come out and say something relatively neutral. Okay, like that's kind of my guess. I would assume they're going to come out and say something relatively neutral, not worse, maybe not even better. Optimally speaking, of course, they do come out and say, "Oh, well, kind of seeing the reaction and blah blah blah. We are going to go ahead and maybe slow down. Maybe now that we've seen that, now that we've seen the effect that we've had up until this point, we're going to go ahead and maybe slow that down a little bit because such drastic measures won't be needed in order for us to slow down this market, as just the news of them was enough to slow them down." And if they were to say something of that nature, which is relatively bullish, maybe we do start to see the fact that, maybe all of the interest rate hikes are already priced in up until this point. And so maybe with that being said, okay, it's like, well, this has been each one of the interest rate hikes. Okay, it's not, but you get the point. Well, maybe at that point we start to see a little bit of recovery, as it won't be as bad as people are already starting to price in. Okay, like that's kind of the mindset I'm in. But you never know what's going to happen. I have no idea. None of us know. We're just going to have to sit back and watch to see what happens. So overall, it is really important as to what happens tomorrow. Okay. And I wanted to really put that into focus because I always do talk about the technicals. I always do talk about the importance of looking for confirmations. But as we are on a downtrend of this nature due to environmental factors, especially something like the Fed, we saw in the stock market last year, looking at the technicals to try to predict a bottom is extremely, extremely risky. Okay. Because my technicals, which I'm going to go over in a second here, they can help say if we find a bottom, you know, it doesn't make sense for us to find a bottom at this level, but it doesn't really say this is where the bottom will be, right? Because say if we're free falling and there's no support at this level right here, there's nothing that justifies it. We have Fibonacci's a little bit lower. We have EMAs just right on top of us and all these things. Well, as we approach that level, I would say likelihood is this is probably not the bottom, as that doesn't make much sense. But if we have a bunch of maybe VPVR support sitting right here, right? Bunch of VPVR there, boom. And we have a 100 EMA there, boom. And we have, I don't know, right? We have another local low sitting right there too. And as we are approaching it, then I can say it would make a lot of sense for us to find a bottom here. So we need to be looking for a confirmation to the upside once we bounce off that level, or I'm expecting a bounce from there. And then we need to confirm it. That's more of the technical side of things right now, because at any given point, I can say, well, realistically, based off the technical analysis, I think that we should find a bottom at $28,588. But realistically, if the Fed comes out tomorrow and says, hey guys, this is even worse than we thought, we're going to interest rate hike this shit up to 80%, hypothetically, guys, it don't matter what line I draw on this chart. This bitch is going down, down, down. You get what I'm saying? And so it's important to mix in your technicals with your fundamentals. It's important to mix in your technicals with your macro environmental catalysts and, things that will cause dramatic effects. Okay. So please don't take what I'm about to say next too seriously without mixing in the rest. Okay. Please, you have to consider everything. Whenever I talk about TA on my channel, I know that I solely focus on technical analysis, but that's because I want to provide the best that I can to one piece of your research. This is not your whole research, okay? Let's just put that out there, okay? So overall in crypto, I think that crypto and the stock market, honestly, I think this is the biggest thing that is affecting the market. Of course, the Ukraine stuff is going on. I think that will be resolved. Of course, we have this stuff with the UK Prime Minister. Of course, that will cause some short-term tension, whatever. But I believe that whatever they're going to decide to do with federal policy is going to be the biggest catalyst in either direction for the market. And considering the fact that we do have something approaching, it'll be very telltale of what happens here. Okay. So now let's take a little bit of a look at the technicals. At this point, I have not sold a single crypto. The only crypto that I have sold in the last like 2 months was Matic. As I didn't even sell all of it. I just took some profits off the top as we were hitting the top side of that resistance channel. I've not sold anything else. Okay, so what do we have technically? With that being said, of course, my favorite word or favorite term. With that being said, what do we have technically to say? Is it realistic that we find the bottom soon? I would say yes. Okay. Now, when I say soon, I mean pretty goddamn soon, right? Now, there's a couple things that I'm paying the most amount of attention to right now. And of course, the biggest one being, can we set a higher low above the previous summer lows? That is still the question of the day for me. Our capability of setting a low above those summer lows, these lows right back here, is the key indicator for me right here. The key indicator for me of if we are going to see a much quicker reversal, if we're capable of seeing a quicker reversal and maybe a bounce even up towards, the $50,000 level before having to figure out what we're going to do here, or if we're going to see, probably much more of a slow, gradual decline that's going to have to bottom out, that's then going to see some type of growth, and then we're going to have to something much more extensive. Okay, this level, in my opinion, will really decide that the relative speed of growth. Well, why is that? Well, the biggest reason as to why that is of course, we're going to be focused. We've talked about it multiple times on the channel at this point, but really focused on our RSI and looking at the divergence in which we're seeing. And what you guys can see here is that we have the key bullish, boom, boom, low, and at the moment, we're looking to set a higher low as our RSI has already confirmed that it will set a lower low. Now, this is bullish divergence. And what this tells us is that generally speaking, based off of this interaction in which our RSI starts to fall a little bit more, a little bit faster than our price, is that it's resetting. And that as it's resetting this room back to the upside, it's going to make its way back to the upside eventually. Again, it always does. It has more room to the upside while also starting at a higher price. And now when it has mods, please go ahead and mute chat. Anyone who's spamming anything, it's ridiculous. But what we can see again is that as it starts to make its move back up to the upside here, it's also starting at a higher price. And as it starts at a higher price, that opens up the door for it to see a larger growth move. Okay. It supports a larger growth move. More room on the RSI, starting at lower levels, in which we will see the relative strength start to maybe bottom out. Then, boom, we start to see growth. And from there, if we're able to set the higher low, basically just to keep it as simple as possible, that then does allow us to possibly see, the setting of some type of new all time high. Now, give me one sec. I got to go plug in my computer before it dies. Alrighty, there we go. So, let me make sure this works. Oh, here we go. Technical. Give me one second. There we go. Perfect. Okay. So, so what that means for us is that optimally speaking, again, optimally speaking, we will see this we will see the bottom being put in above our previous lows. That is the goal. The goal is to see a bottom above the lows, right? Higher lows. Now that's fundamental too. Whenever you think about any type of technical analysis, what's fundamental? Higher highs, higher lows in an uptrend, higher lower lows, lower highs in a downtrend. So we obviously don't want to set a macro downtrend by setting a lower low, which then looks like us probably coming back down to lower levels before eventually starting to return. And it looks like a much more extensive move. Well, do we have anything that says, well, we might set a higher low? Okay. The only thing that I'm really paying attention to is that we do have this weird interaction with the previous all time high, our January 21st highs, our January 21st lows, and our summer lows. And we created this upward sloping level of previous resistance flipped into support. And now, when we have a trend line, especially now that we have 3 points on this line, it does create a trend that does say that there is the possibility. Is this hopium? Probably so. A little bit more hopium than not. But there is the possibility of us finding some type of support here and creating what we would look at as a consolidationary event or some type of ascending wedge in which, we see this kind of accumulation happening before possibly seeing the breakout continuation to the upside or, of course, the eventual reversal to the downside. And so considering the fact that we do have this ascending level, there is the hope, because this is more hopium than not, that we do have the ability to set the higher low. I'm at the point where if tomorrow they come out with some good news, it could definitely bounce us, right? It could definitely bounce us out of here. We set the higher low, and then we start to maybe look for some type of short-term reversal back up towards the 40, $50,000 area. That is very possible. But it's not something that I'm counting on, especially right now as we are in free fall, right? Now, personally speaking, let's kind of talk about what happens if we don't. Well, what happens if we don't? What happens if we don't and we come back down towards these previous levels? Where do I think this goes? Well, personally speaking, where I think this goes is I think we're going to realize that we are now at a make it or break it moment, in which we're going to come down to a level around $28,588. And that's the minimum level of support for me. I think that that is where there is the most demand for Bitcoin over the last year. And that is really going to tell us if we are going, if this is much more substantial. Oops, didn't mean to do that. If what we're seeing is much more substantial in terms of, the long term macro effects of crypto than what we've seen historically. If we start to see the price coming back down below these previous key levels of demand, that says that the market is really taking this, what we're seeing into consideration right now, and that this is a much more extensive and something a lot more dramatic that is probably going to take a little bit more time to recover from. Now, what's crazy about it is that realistically, I'm cool with seeing a slower recovery. A slower recovery means we get more paychecks over time and we have more money accruing over the months in order to take advantage of the growth. If we just bounce now, well, whatever you have in now is all you have in at this point. So, but realistically, I think the loss of this level does start to kind of say this is probably going to take a little bit longer than expected. Now, is that something to be concerned about? It kind of just depends. Okay. Personally speaking, I knew what I was getting into whenever I bought crypto. I knew that as I went into this thing, it was something that can see 60, 70% falls. And that's what we're seeing right now. Right now, we're at what, 56, 55% off all time highs, 52%. And realistically, um, you know, it, it could keep going. Now, I am under the belief that it is going to recover and we will set a new all-time high one day. And I'm not, I'm it would be extremely difficult to convince me otherwise at this point. But would I be lying to say that if we lost this level, I would be lying to say that if we lost this level right here, realistically, we're probably going to see, there's a chance that we see the 25s as low as $18,000. That is my minimum level now on a macro scale. Now, well, how did I get to $28,588? Well, let's go ahead and talk about that. So, of course, we have this very, very obvious, this extremely obvious level of demand, in which every time we came down relatively close to this level, we would see the wicks get put in. This is where we would immediately get bought up. And we have found two extremely strong macro moves off of that level. But one thing we can also do is we can take our Fibonacci's and actually statistically identify what this is. Why is that a demand zone? And you can go ahead and you can draw your Fibonacci from swing low as we did put in back in November of 2018. Let's go ahead and do that. There we go. And you can go all the way up to your all-time high. And now what you can see is that on a macro perspective, this is our 0.618 to 0.786 Fibonacci retracement zone. And now generally speaking, is that as we do see these moves all the way to the upside, something that we know is that as the price gets extended at some given point, very, very likely, it is going to resort back down to its 618 to 786 Fibonacci retracement zone at most. What that means is that as it retraces, this is the only level, this is the level that must hold. And that, sure, this one could hold, or this one could hold, or this one could hold, but this one must hold. And that if this one doesn't hold, well, likelihood is we're going to resort back to our lows. In this case, that says $3,000. I don't see that happening. And so what that tells me is that since I am under the belief that we shouldn't, I don't really see a reason based off of the amount of fundamentals and the amount of adoption we've seen over the last 2 years. I don't see a reason as to why we would even go back lower than our previous all-time high. But what I know is that there is the capability of us revisiting on a statistical data-based analysis. There's a chance that we come back for a short amount of time towards $17,500 at most. Because I don't think, again, we lose this level, because if we lose that level, that entails that we could revisit back down to $3,000. And I don't see that being a statistical probability based in the realm of possibilities. I think that's a very minute option. And so for that reason, again, I think that our very bottom, $17,512. Now, whenever we start to put this in kind of a realistic perspective, I'm not sure that we get that low either. Is it possible? Absolutely. But I don't think we go that low. But what I do know is that if we lose $28,000, $28,553, that is now a possibility. Why? Well, we lost a 618. What's next? The 786. It's a 618, 786 box. When you lose this one, that's your bottom now, and you're ranging in this level. So my personal game plan is that if we are to lose $28,553, I am actually going to call this my accumulation zone. In that at the point in which we start to enter this zone, I will actually start to accumulate with the expectance that if we were to come back down below the 786 box, I will then exit my positions. Likely. Every position that I have started within here, I will exit. The ones that I've built up over the years, I'm gonna leave them alone. But the positions that I start to build within our 618 to 786 retracement box, those will get closed. Because at that point, we then have to see, all right, are we going to 10K? Are we going to 12K? And I don't feel like dealing with that. Okay. So personally speaking, again, in the event in which we are to come down past 28,553, I am under the belief that this is now an extensive fall in which it sees something like this, which could take time, right? Could be into, more to the middle of the year. But I am under the belief that we will hold above this level. I am under the belief that we will not fall below this level. And if I'm wrong, I'm wrong, and I can be wrong. I don't know everything. But I am under the belief we will not lose this level. And at that point, we will then start to confirm that the bottom is being slowly set. Now, in the event in which we start to bounce above that level, we have to understand that we still are under the bounds of this bullish divergence in which we talked about, in which we definitely could be looking at more of a quick reversal back up to the top side. I'm not sure that at this point, unless the Fed says something real good tomorrow, that we're going to see a huge fast bounce up to the 60K. We definitely could dead cat bounce back into the 45K area over the next month, but I'm not sure that we see a recovery back to our all-time high that fast. I think that it takes a little bit more amount of time, and I think it is a little bit more likely at this point that we come back to revisit some of these maybe even $30,000 to $29,000 lows. I think as we continue down, dependent on what they say tomorrow, and again, it is becoming more likely that we see that push back down towards the $30,000 ish area. And then from there, it comes down to, do we hold it or do we set the lower lows? If we go in to set the lower lows, I then enter into accumulation. And if we hold it, I'm looking for my bullish breakout confirmations to then start to take on some short-term trades back to the upside. Both of those options means that I am under the belief that growth is relatively soon around the corner. And that's why when I started this stream, I said that I am under the belief that we will see growth soon. Whether that be short-term growth that then needs to find a bunch of support in order to be maintained, because we bounce, we set the higher low, this bullish divergence goes into interaction, and then we start to see real growth, or whether that means we start to see the loss of this key level on a macro scale that enters into this downtrend. And then during this box, I do start to do my own mass accumulating because I am under the belief that this is where we will find a low at most. I do not believe we will go down below this level. It's just my belief. It's not even really hopium. It's just statistically based. I don't see us falling below our all-time high for an extended period of time. And if we were to lose this level, that is likely. And I don't see that happening. Just my opinion, just my fundamental analysis. Also, at that point, we would start to see some of the lowest readings that we've ever seen on the RSI. All of these things saying that a bottom could definitely be in. So, how you take that is how you take that. That is how I'm thinking about this, and that's how I'm game planning this entire move. Now, there are a few things we need to pay attention to. Something we need to pay attention to is the weekly Gaussian channel. Now, what's beautiful is on the weekly Gaussian channel, we've lost our mid-level of resistance and support, but we are inching very close to the bottom side here. And now what we know is that these three levels on the Gaussian channel do serve very strong. Do you follow this rule for all holdings? If we lost 786 down at $17,000, I would get pretty goddamn worried. Okay. So what we know about the Gaussian channel on a weekly basis is that each one of these levels is extremely important, right? We can see that we held up this level of support all the way up until we didn't. And then usually speaking, once we lose that, we will revisit the mid-level. Once we lose the mid-level, likelihood is we will revisit the bottom side. Currently, bottom side is at $31,000. Now, what's beautiful about it is that we are looking at hitting that level before we do see before we do see the loss of our 618 level at 28,550 bucks. So what's great is that we have this key level of support here. What's also fantastic is that looking at our Bollinger Bands and analyzing how we're seeing these volatile interactions, of course, one thing you can see is that we have now extended. What's up? What's up? What's up, homie? Thank you. Thank you. What we can see is that we have extended down into the bottom side of our Bollinger Band envelope. Historically speaking, in uptrends and in downtrends, once we come down to this level, we're only here for a very minimal amount of time before seeing a resortment back to our moving average. You can see here, we bounced, resorted back. Even on the other side, we got extended, bounce, resorted back. Extended, bounce, resorted back. Extended, bounce, resorted back. Looky here, bounce, resorted back. Bounce, resorted back. I can keep going. I'm not going to, but you can see here we were extended into it. We came back down to it. We were extended into it. We came back up to it. Right. And so you can see is that realistically, once we reach the bottom or the top of our macro Bollinger Band envelope on a weekly perspective, likelihood is this is getting towards as low as it can go. These are like applying the brakes, right? Like whenever we're seeing growth to the upside, we're hauling ass. But the moment we hit the top of that Bollinger Band envelope, it starts to hit the brakes. It doesn't have to be immediate, but it starts to hit the brakes, and then we see the pullback. And similarly to what we saw back here, right? Is that as we're falling, we're just going down, down, down. But even here, boom, we start to hit the bottom, and that starts to apply the brakes. And then we start to see that turnaround. So, considering the fact that on two macro perspectives, we have extremely strong levels of support that supports the ability for us to set a bottom, especially considering the fact that we have such a strong demand zone, especially considering the fact that we have a macro Fibonacci 618 to 786 level, I am under the belief that there is a strong chance that we do hold at least at this level. But that is the reason, considering there is so much support here, that if we were to lose this level, I am under the belief that this is something more extensive. That's why I'm under the belief that this is something that takes a little bit more amount of time, because the loss of that level is the loss of some very strong shit. And then from there, I think it takes a lot more time to recover from it. But even though it takes more time to recover from it, I don't think that it entails that there will be a significant impact on the price from that point forward, as low as, in my opinion, $17,000. Okay. That's 50% from here. But in broad perspective, I mean, that's not that much more being added on. That's from 50% to 70%, right? So that is the reason now that I've talked about the level as to why I need to see this level hold. Right. This is kind of the make it or break it. We need to see this shit standing, and we need to see it holding, because if it doesn't, that is a loss of a lot of strong areas. Okay. Then it becomes more extensive. Now, my accumulation, of course, I will document it. I will let you guys know how it goes. If we do enter into this level, there are confirmations I will wait for, right? I'm still going to wait for some of my bullish confirmations, but I will be doing a lot of buying in this zone. I think this does, at the loss of this, and we enter into here, this looks like ETH probably being towards 15 to 1700 bucks. I will be accumulating as much Ethereum as I possibly can during that time and things of that nature. But I'm not even thinking about this really. I'm not game planning too hard for this yet until we see the loss of this level. But as you guys can see, there are many technical indicators that say a bottom makes a lot of sense at this point. Okay. But remember what I said at the beginning of the stream, the environmental effects and the environmental catalyst will have a very significant impact on if that happens. Okay. Gotcha. So we've talked about what's causing this. We've talked about why environmentals versus technicals are important. We've talked about what the levels are and how can this play out. I think we either hold here or we go into a longer accumulation within this level above $17,000, but I don't believe that we see the bottom. I talked about why putting in the higher low is important in terms of weekly RSI macro divergence, in which that could be the very quick spring back up to the upside rather than the slow gradual growth back up to the upside. And then I talked about why this key level at $28,553 is so important, considering our Gaussian channel, our weekly Bollinger Bands, our strong supply and demand zone, our strong demand zone here, and then our Fibonacci retracements are there. That is my full understanding and my full kind of expectations of what we have going on at this point. So what happens from this point forward is we need to monitor a few things. Okay. In the short term, what's going to happen every now and then is that there's going to be crypto. And now, the reason I've been only really covering Bitcoin on this stream is due to the fact that Bitcoin controls this market and is performing better than the rest of the alts. Okay. People can say that's not true. Go look at Bitcoin dominance. What is Bitcoin dominance? Bitcoin dominance is the performance of Bitcoin in relation and in comparison to the altcoins, in which as Bitcoin's market cap grows or falls in relation to how the total altcoin market cap grows and falls. If Bitcoin is outperforming, it goes up. If Bitcoin is, not performing as well, it goes down, right? If Bitcoin's market cap is 50, the altcoin market cap is 50, Bitcoin dominance is 50%. Okay, just to put it into perspective there. What we saw was a bottom get put in on Bitcoin dominance. Now, what's beautiful about this, though, is that before we saw this bottom get put in which we put in a W bottom here, we back tested the MLR, this mid level resistance and support. Boom. MLR got back tested, established a support continuation back to the top side. So, what it says is that Bitcoin is now in control of this market, and that more people are funneling money from their alts into Bitcoin, or more money out of alts than in Bitcoin. One way or another, both of those says that Bitcoin is back in control of the market. Now, what's beautiful about this, though, is that we saw the lower low. So at this point, even if we go all the way up and Bitcoin's really in control of the market for an extensive period of time, as long as we set a lower high, I do believe that we are still within the bounds and within the realm to see the continuation of our altcoins dramatically outperforming. Okay. Troy, shut up. And so, yeah. And so, as we did see this lower low, that does start, step one of a macro downtrend. Now we just need to see the higher low off of this bounce, which is okay, and we need to see that continuation. So that's also the reason as to why I still would be accumulating something like Ethereum if we were to see the fall. So that's why I'm talking mostly about Bitcoin right now, because it's in control of the market. Something that I want you guys to pay very close attention to is as this thing does start to fall, there's going to be moments where we're going to see something like this, where the market starts to look real good. Not good, but it starts to stop. It starts to finally just stop dropping, right? Now, over the weekend, we started to see that the market seemed to be trying to find a bottom. And I actually went ahead, and I'm going to show you guys. I actually went ahead and I put in the Patreon, right? I said, unless the Fed says something pretty damn good on Tuesday, I think we need to prepare to see Bitcoin come down towards $30,000. Now, why did I say that? Right? Well, realistically, the reason that I said that, give me one sec. The reason that I said that was because what we were seeing right here was an overextension on the smaller time frames. And now what it gets people is that as the market's falling and it starts to see a little bit of recovery, it'll give you a bit of a sign. It'll give you a little bit of a sign if you go look at the RSI to see if we're looking at just a relief bounce or if we're looking at an actual reversal. And now what we can see, just so you're able to recognize next time, you're able to recognize this as to why I was under belief we would see this continuation back to the downside. This didn't feel like a bottom to me, was because if we look at our RSI, look at the lows, look at the highs. So of course, at first glance, this move looks like this move, right? Well, not exactly. What you need to do is you need to look on the hourly time frames and plot out what are your macro highs here, right? From this big move to this big move, what are your macro highs? We have this one, we have this, we have probably this low, and we have this high. Okay, as we were setting them. And now what you need to pay attention to is that as we're working our way up, we have these highs, but look at in relation to where this one was. Come back down, boom. Now, as you can see on the shorter time frames, we had this higher low, this lower high, this lower high, in which we had not re-cleared this previous high. But on our RSI, we saw, I will probably not be able to get the any swap today. But again, we saw lower high, but we had already seen an extreme higher high on the RSI. That is a sign that this move is moving too quick in the short term. Likelihood is we're going to see this bearish divergence play out, obviously, unless we are able to come back up and re-clear $39,000, which in the environment we're in right now didn't seem likely, and that we would need to see this thing reset, and that we would have to see something, much better happening to allow us to see the growth back up towards the upside. And so as we do start to see these short-term bounces, pay attention to your RSI. Don't look at just the price and don't say, oh, well, it kind of recovered, right? I mean, we were at 34,000 and now we're at 36,000. So we're probably going up. I should buy some more before it goes back up to 50K. No, don't just blindly do shit. Okay. Go to your RSI next time, in my non financial advisor opinion, of course, and go pay attention to if this move is supported or not. Because if it is supported, it'll work a lot more in tandem with the price. For example, when we saw the September lows, let's go back here. Okay. Let's take a look at what happened here. So, what we can see is that as we were working our way up here, boom, macro high. And although we did get close, one thing you can see is that we kept reversing way like right before we would see the setting of a new high. And we never came back up to re-clear that macro high. And so even as we went back, we pulled back, we retried it, and we went right back up, right under that macro high, but never cleared it. And so we never confirmed the bearish divergence here. Then we see the pullback. Then we see the pullback. And then boom, we see this break to the upside, in which we equal out on our highs, equal highs. Then we set the equal high, and then we start to work our way back up. So you can see that there's no major divergences happening here, right? There's nothing that says, okay, right, we didn't see this happening, in which we set high, and our high was like down here. And then we said, this lower high, but then we set a higher high. No, that's not what's happening. We're seeing the price and the RSI interacting a little bit more in tandem with each other. And that's kind of what I use the majority of the time to say, is this move supported by relative strength index or no? And so what you can see is that when you look at that in comparison to what we saw back here, look at the dramatic difference. High, lower high, high, higher high. That's your sign that this is likely not supported. Okay. This is very likely not supported by they can predict what they want to predict, but I mean, so someone said, have you seen someone predicting Bitcoin down to 5K because of war? Crime. I mean, whatever. Like, yeah. I'm just not paying much attention to that. Not likely. Very unlikely. Is it possible? Sure. Likely. Probably not. Okay. So anyway, and the thing about that is the reason I say that is because why would you equate $5,000 to war? No one knows what the effect of some type of world war would have on an asset that's only like 8 years old, right? How would you just randomly pick $5,000? You get what I'm saying? Like you're just throwing numbers out there at that point. I'd love to have a talk with them, but anyway, so in the short term, as we do continue down, be on the lookout that as we see these bounces, they need to be supported on the hourly and the 4 hourly RSIs. Until they are, we're likely just going to see it continue. And don't get fooled by these. Okay, don't get fooled by these little relief rallies. Things can't always go down, just like they can't always go up. And so, just because we see some sideways movement and just because we see a little bit of growth doesn't mean that it's the growth. Well, what is the growth, right? Well, at what point would I start to, accumulate a little bit? Well, remember that for me, personally speaking, I'm not too focused on getting the best buys. I'm focused on getting justifiable buys. I want to buy things whenever I can justify them if I'm wrong. Why? Well, I want the emotional stability and the emotional support to know that although I was wrong, I had a reason as to why I was wrong. If I'm just YOLO buying in spots like this and like this and like this and like this, and it just keeps going down, I'm just going to be pissed off at myself that I bought at these random times. But if I buy at a point in which is justifiable, well, then I can look back and say, okay, that very possibly could have been the bottom, and that was a good buy. And as long as I know that was a good buy, I am okay with being wrong because I'm in this thing for the long term. So, personally speaking, you guys know I will not do any mass accumulating at all until we clear the downward sloping trend line. That it is as simple as that, right? Until we see this get cleared from, we officially now have 3 points, point one, point two, point three, which creates a trend. Until we see this get cleared, why would I buy it if we're in a continued downtrend? I won't buy it at this point because there is still the risk that we see a pullback. That we see, a pullback back up off it, like we saw here, like we saw here. I actually made a video. Let me see something real quick. One sec. Curious. I made a video talking about this, right? Um, I made a video not too long ago in which I talked about. Let me see. Let me see if I can find it. Give me one sec. Give me one sec. Here we go. I made a video a month ago, and it was called. Boom. Let's go back over here. and it was called "Stop Buying the Dip." As was that a little bit, a little bit of a dramatic title, sure, but looking at this, December 14th, I said, "Stop buying the crypto dip." Now, why did I say that on December 14th? Let's go back to when that was. December 14th. Let's add a vertical line here. Boom. Okay. Alt V. That was right here. And the reason at this point, in which I said stop buying the crypto dip, is that we had no upward confirmations that we were going to break out. And I was talking about the fact that people were just buying it simply because we had saw a big ass fall. And I said there is still the chance at this point that we continue down and that we don't put in a bottom here just because it's red. And since that day, we can see that Bitcoin has fallen another 30%. And so, just like I was in the mindset back then that I'm not going to just be doing mass accumulating just because it's red, I'm even more in that mindset now that things are even more shaky. So, personally speaking, what I'm waiting for confirmation number one is that we just get back above the trend line. At that point, I will then start to look for confirmation 2 and 3. I usually work in threes. Okay. I'll set 3 confirmations. Right now, what would be the big confirmation? The big confirmation is that we break out of here. We get back above our 20-day simple moving average on the Bollinger Bands, as you can see, which is back up here. And then we get back above $44,000 and we hold it as support. We hold it as support right here. Boom. Right. This is what I would need to see. This is my mass accumulation right there. That is 3-step confirmation. Boom, break, moving average break, resistance break, support establishment, we're gone. Okay. That's mass accumulation. Bit of a buy here, bit of a buy here, bit of a buy here, we're gone. Let's go. Okay. So that's what my mass accumulation looks like. So until we see that happen, I'm going to do a little buying, right? I'm going to pick up some ETH. I want some ETH. ETH is at $2,000. It's at $2,235. But on a macro scale, Ethereum just lost its 786 bucks. What does that mean? It means that the door down to $1,600 is now open. So why would I be doing mass accumulating while we're in a confirmed downtrend with breakdown targets that could be even cheaper? It doesn't make sense. It doesn't make sense to just buy it just because it's red. You know what I mean? And so that's the reason why, although I have all this knowledge and that this knowledge of what's going on in the market right now, and that I have this understanding of where this thing can go, it doesn't mean that I should just be buying just to buy. Why? Because I want justifiable buys. Because what happens if Ethereum, I buy it here just because it's pretty, it's at 2,200 bucks, and then it goes back down to 1,200 bucks or 900 bucks or 800 bucks? What happens at that point? I would be upset with myself. I would be upset with myself saying, Tyler, you knew your confirmations. You built up all this damn knowledge. You did all this studying of the charts to see what usually says that we're going to break to the upside. And you didn't follow it just because you got excited and you got greedy. And now you lost some more money that you didn't need to lose. You could have been making money from point A to point B rather than recovering money from point B to point A that you lost. So in terms of mass accumulating, in which I'm talking spending 50, 60, 70% of the cash I have available will not happen until Bitcoin breaks trend, at least. That's number one, right? And so what does that mean for me? Well, it means I'm just sitting back and I ain't doing shit. It hasn't broken below the trend line. Yeah, it hasn't broken below the trend line for sure. But it hasn't broken above it. You know what I mean? So until we see the break, that's me. Okay. And so what does that mean? Well, it means I ain't doing shit. I ain't doing a goddamn thing. Why would I? Why would I buy here? Why would I buy here? Why would I buy here? Now, let me go ahead and let me talk about this though. As I am getting to the point in which I am believing the bottom will be sooner than later, I am going to do small buys. Okay. I see Ethereum and I want to buy one Ethereum because it's one Ethereum at $2,200. Sure. I'm going to do that just because why not? Shits and giggles. I want it that low. But that doesn't mean that I'm not doing any buying. It means I'm not doing mass accumulating. That is an extreme difference. Because why? I want to have as much cash on the sidelines as I possibly can for the moment that we start to get these upward confirmations. For at that point to lower my average as much as possible. And then at that point, I am growing instead of recovering. I want to be growing while everyone else is recovering losses. Right? And so does it mean that dollar cost averaging this dip, if you've been doing that, is a bad thing? No. As long as you are capable mentally of seeing it just continue down. I don't want to do that. I don't see a reason as for me personally to put my money into something that hasn't shown me any signs that it's done going down. If like I said in a live stream on my Patreon earlier, I said, hey, if there's a car you want to buy and you want this freaking car so bad, you want that Ethereum at $2,200 so bad, but there's this Dodge Charger, right? And you're looking at the website and it says price likely, not guaranteed, but likely to continue to fall. And you don't give a shit because you know you want that car. There's so much benefit that comes from that car. You want it so bad, but it says price likely to continue down. Would you go buy it? Would you go buy that car? Probably not. Probably not. What would you do? You would watch that you would watch that website and go check it every day and look for it to say probably likely to go up. And then it says maybe a little bit more likely to go up. And then it says likely to go up. And then it says likely to go up. You're like, fuck it. If I'm wrong, I'm wrong. But I want this car so bad. And I think this car brings me so much benefit that I'm okay with buying it right now, even if it does continue to go back down, because it's justified because I want it that bad. That's how I see crypto. Right now, it says likely to go down. Crypto says likely to go down. And until we see a trend break, in which we see a trend break, it says, oh, probably likely to stop falling as much. Then we see a breakout to the upside, and we're like, okay, this really might go up. Then we see a support establishment, and we're like, likely going up. Likely going up is when I would rather buy. Because even if I'm wrong, that was the justifiable buy. You see what I mean? So that's my rationale. That's why I'm not one of those ones who's like, buy the effing dip, buy the effing dip, buy the effing dip. I'm just not one of them. I'd rather buy it when it's likely to not fall. I mean, I don't think anyone would hate me for that. And so overall, it means I'm just waiting. I am under the belief that the bottom is set soon. I think that the steep, drastic, nasty ass shit we've been seeing for the last 3 months comes to a close relatively sooner than later. I don't envision this continuing down much longer. I would say as long as April 1st. Okay. I know that sucks, but it is what it is. I say we hit my minimum level of support on April 3rd. I would say that's as long as this could continue another 2 months. I don't think that's possible. I don't think that's very likely or probable. I think that the bottom very likely or very possibly can be set relatively soon. And I am expecting that even at $30,000, we will see some type of bounce that will give us a lot of information about what we need, considering all of the factors that we talked about earlier. Okay. We talked about what happens. We talked about why these levels are important. I'm not going to go over it again, but I am under the belief that something should happen here. And then, of course, we'll just go ahead and we'll gauge it. And then we also have to factor in environmental catalysts. Okay. So today's stream has been super action packed. We're going to transfer. I'm checking. I'm seeing a little bit of lag here. And if we are going to start lagging, I'm just going to wrap it up. Okay, we're good, I think. It's Wednesday's Fed news. Okay, sorry. I thought it was tomorrow. It's Wednesday. So again, I'm not sure. I'm not sure. I don't know what type of impact the Fed news is gonna have. It really just depends. I as a technical trader have completely stopped trying to equate big news like that to what's gonna happen. I don't even try anymore. Okay, because you never know. So yeah. So in today's stream, kind of to recap for anyone who's just joined in, again, we talked about what's causing this. We talked a little bit about what I'm expecting. We talked a little bit about our 3 outcomes: the higher low, the equal low, and the lower low, in which I think this is a fast recovery. This is like a little bit more of a midterm recovery if we can find some support here. And this is like the long-term recovery as low as possibly $17,350. We talked about our 3 outcomes there. I then, kind of justified as to why these levels are important, especially this one. And I talked about in the short term, again, we do have our bullish divergences here that could lead us to see a quicker bounce. We have our more macro support levels that do allow us to see some type of continuation. And then we also have our long-term Fibonacci that really likely should hold us up at that point. So now what we're going to do, now that we talked about Bitcoin and we talked about how that's going, in the next stream, I was going to do it today, but we're at an hour and I want to go into altcoins. We're going to go over some of these things. Do pay attention to the fact that funding rates are still low. Look at the fact that our whales are not doing anything still. And so this is a lot of retail up until this point. And look at the fact that inflows and outflows are still very equivalent in the sense that the majority of people are still holding. And that all says those all do relate very similarly to the idea that we will find a bottom soon. I will cover all of these in the next stream. But now, again, I do want to go into alts. We're at an hour. If anyone does have to go or do anything, of course, I understand it. I'm going to put these time stamps in the description down below for you to come rewatch it. Okay. So let's talk about altcoins. Okay. This is a long stream. We're doing this thing. Let me go check the likes real quick. Now that we've been talking for an hour, what are our likes looking like? We can see 100 likes. 20 of you who's watching this right now haven't liked it, and you don't want me to start doing the annoying tap on the mic thing. So let's just get that up to let's just touch that like button. You don't gotta beat its ass. Just touch the like button. Okay. All right. So let's start off looking at Bitcoin dominance. So Takoi, what's up, homie? So what did we talk about with Bitcoin dominance earlier? Well, what we know. Let's talk about what we know. What is Bitcoin dominance again? Let me just refresh. So Bitcoin dominance is the reaction in the relation, the comparison to say of Bitcoin in relation to altcoins. Okay. So the statistics behind Bitcoin dominance is the total ratio of the market cap that Bitcoin holds compared to alts. What that means is that if your total market cap of cryptocurrencies is 100 million, your total one, and Bitcoins is 53 million, and your altcoins is 47 million, that means that your Bitcoin dominance is sitting at 53%. Okay. It is a ratio of the total market cap that is held by Bitcoin. So obviously, if altcoins are doing bad and Bitcoin is doing better, and the market cap of Bitcoin is climbing as the market cap of altcoins is falling, it means that Bitcoin dominance is growing. Similarly, if we're seeing altcoins falling, Bitcoin falling less, Bitcoin dominance is going to go up. But if Bitcoin dominance isn't doing any, or Bitcoin's market cap isn't doing anything, it's staying flat. While the total market cap of altcoins is growing, Bitcoin dominance is decreasing. Okay. So it's just a comparison. How is Bitcoin performing against altcoins? So what do we know? Well, what we know is that let's go ahead and let's just clear all this off. One thing we know is that we are in a continuative pattern. What is a continuative pattern? Pattern that continues. What do I mean by that? Well, we saw this fall. What was this fall? This fall was whenever we saw altcoin season raging, in which we go to the total market cap of altcoins, and this was happening. And we saw the altcoin market absolutely climbing while Bitcoin realistically wasn't doing too much. What that caused was this dramatic decrease in Bitcoin dominance. Now, what happens here and what's interesting about it is that as we did see this fall, we are now in what seems to be a continuation pattern in which we see lower lows, lower highs. My apologies, lower. Let's get this perfect. There we go. We're seeing these lower highs being put in, meaning that the selling is happening at lower points. What does that mean? It means that people are willing to let this thing run as far as they were before. Well, what's also happening? Well, what's also happening is the idea, and not even the idea, the fact that we're putting in lower lows. What does lower lows mean? Lower demand pools. What does that mean? It means that people aren't willing to get into Bitcoin, or Bitcoin isn't outperforming alts at certain levels in comparison to where it was. It's taking it going lower and lower. It's what you just simply call a downtrend. Let's make it simple. And so as the demand decreases, and as the willingness for Bitcoin to outperform for significant periods of times in certain ratios decreases, it says that the likelihood is that coming off of a downtrend, that this is a continuation pattern to the downside. Some look at it as bear flags, some look at it as bear triangles or bear wedges. I just look at it as a continuation pattern. And that there is the possibility that we see the break to the upside. It's always in the realm of possibilities. But the likelihood, let's get this guy muted. But the likelihood is that we see this be a continuation pattern, especially when on a macro scale, we've put in a low and we've put in the lower low, meaning we just need to put in the higher low before likely the continuation to the downside. Looking at the RSI for the Bitcoin dominance. What's up, Jamaica? Looking at the RSI from Bitcoin dominance, okay, what we can see, highs, 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 much lower high, kind of lower high. What does that mean? The RSI is a lot less applicable to Bitcoin dominance in comparison to individual cryptos, in my opinion. But it does kind of entail when we're seeing kind of momentum shifts, right? You look at the last two times we're in overbought territory. You look over here, momentum shift. You look over here, momentum shift. So it's definitely applicable. And what we can see is that Bitcoin dominance would have to go all the way up here, like that, to justify. I mean, it would have to go like right here to justify the position that it's in on the R side. What this says to me, likelihood is this is overextended. It's overmoved. It's climbing a little bit too fast. Alts are falling a little bit too hard. When we put that into perspective with the daily Bollinger Bands, you can also justify that there by saying that we are extremely extended into the downside, as we can see, extremely extended into the downside. And likelihood is, as we're getting extended to the downside with Bitcoin dominance extending to the upside, that tells us that the likelihood of this is that alts will at some point continue to outperform Bitcoin. If we are seeing the setup for alts to continue to outperform Bitcoin, does that sound to you like an extended bear market? Not really. Not really. So that's why I'm under the belief that the bottom for Bitcoin and the bottom for this market is likely to be sooner than later. And in the event in which we see that bottom getting put in, we see our alts dramatically returning to some of this. Okay. Likelihood is we see some of these alts resorting back to key levels. Okay. Is this possible? A W-shaped recovery and a massive continuation to the upside, which looks like the alt's just dying? Sure. Likelihood is probably not. Right. So that means that we should be considering our altcoins as we do enter into accumulationary periods, whether that be the break of trend, establishment of support, and the breakout to the upside, or whether that be the break into our key level of support, in which I personally speaking, this is my game, get my game plan. This is me. I'm not a financial advisor. I'm not telling all 140 of you what to do. When we enter an accumulationary zone, is that the point in which we start to accumulate also on altcoins? I would say it makes a lot of sense. Okay. So what alts are there? Well, personally, I would say the best bet, your best bet right now is sitting around Ethereum. I have a very, very, very hard time saying that the one that is the most likely to see growth is in Ethereum. It is Ethereum. One thing I want you guys to go watch is this video here. I want you, this was it was perfectly timed. Go watch this video. ETH potential in 2022, in which he highlights where we're seeing Ethereum going and how they're doing this. If Ethereum is capable of doing everything that they're set out to do, it is going to be extremely, extremely difficult for any of our other alts to replace it. Extremely difficult. Name value is the biggest one. Pioneer value is another one. And just overall performance in terms of sharding, in terms of staking, in terms of the overall support behind Ethereum and the amount of people who clearly want to use Ethereum, it is your best bet at the moment, unless some type of crazy regulatory action comes out, of a crypto that will likely set a new all-time high, as Bitcoin does as well one day. Now, considering the fact that we are sitting a whopping, from this point, 120% from all-time high, with that much likeliness to see that at some point, it's a hard one to say isn't the best option right now for me. There's other ones I love. ADA at $1 or below is always a buy for me. Solana at $100 or below is always a buy for me. I'm waiting for this interaction at the $72 level, but looking at DOT, Parachain's launched, and this thing has been looking ugly ever since. Looking at something like Phantom that had a beautiful day yesterday before seeing that bounce, but all the way almost back down to our key level, which we talked about. I drew this line right here while we were at all-time highs. There's great options, but are they all as likely to see growth back to the upside as Ethereum? No. Will they? Probably. ADA's probably going to make it. Solana's probably going to make it. DOT's probably going to make it. But in terms of likeliness, I'd say Ethereum's at an 80, 90% chance. 90%. There's a 10% chance that some bad shit happens from now into the launch and the merging and everything like that for ETH 2.0. And it would just be so dramatic, right? This is my best bet. So for Ethereum, I'm actually kind of interested to see what happens here, right? So of course we do have this ascending level of support. And now we also can see that we did lose our 786. So what's interesting is that we have one last key level of support that's stopping us from resorting back down to our $1,700 level. Now, if Ethereum is capable of working its way back up, you guys know the deal. I am not doing shit until it breaks this downtrend. Will I possibly lose some, some possible gains of maybe even up to 20 plus percent? Sure. I'm not doing mass accumulating on it though until it comes here. Now, if it starts to show early signs of reversal, I might buy one Ethereum or another Ethereum here as it's slowly creeping. But until it breaks this, I'm not going to go. I'm not going to lie. I'm currently set to buy 30 Ethereum. That's my current goal right now. Okay. I personally have the goal in mind that I want 100 Ethereum one day. Okay. And I'm looking during this dip to buy 30. Okay. And so I might buy so just so you can kind of see the comparison, the ratio, I might buy one or two or three Ethereum during this. But in comparison to the 30 that I'm set out to buy, I'm not doing anything until we start to see a trend break. So sure, I may do a little bit. Oh, here's this guy. People always tell me I sound like Kermit the Frog. I mean, it's like you have fun being a dick or no? No, I'm just joking. It's fine. The thing is, it's like okay, but yeah. So I might do a little bit, like a little bit of accumulating here, but I can't justify that until we see the break of trend at least. Because why? Because although I want some Ethereum now, that website that says likely to go down still says likely to go down. So Ethereum is the one that I am the utmost bullish on and the utmost excited to buy at these levels. I mean, this is where I want to see this is where I want to see the majority of my money being put into. Let's talk about some other options. So Ethereum, I'm still waiting on the trend break. If I'm going to be getting in, maybe on the short term, maybe if I'm looking for some type of bounce, maybe I think that there is the possibility. What I would say is that if Ethereum is capable of breaking back above its 786 level and breaking back above 2,500 bucks, and looks like it's going to hold a little bit, I may buy a little bit in ratio of what I want. That would be like a 16% move. That is a good sign that we may have found some type of short term bottom. We may be coming back up to retest these levels. And then who knows, right? Maybe I purchase a bit here. Maybe we come back up to our trend line at that point, which looks like some type of 15 plus percent growth. We start to see reversal in the loss of the 618. And as that happens, I take this little short term trade of what? I take a little short term game of 11% on maybe what, two or three Ethereum or something like that, which could be a pretty good return. And then I just take that profit and I use that profit to buy more Ethereum if we do continue to the downside. So personally, I may do a little bit of short terming on Ethereum here if we're able to break 2,500 bucks, looking at a breakout target back up to the trend line though. Okay. Now, looking at something like ADA under $1 has always been a fantastic buy to me. Right. Now, what I like about ADA though is now that we've got that one more bounce, that Sunday swap bounce, we now officially have a trend. And that's always so important. Now, one thing I talked about ADA on the channel was the fact that if we lost $1.32, we're probably going back towards $1.20, then $1. And now remember, the reason we talked about that was our Elliott's wave theory, okay, in which we had wave 1, 2, 3, 4, 5. And we were looking at Elliott's wave 5 breaking us out of the downtrend in which we had been in. But what happened is that as we put in wave 3, we saw the retracement back to wave 4, in which we tried to put in this low on top of wave 1. That's your fundamental Elliott's wave theory. Your wave 4 needs to be above wave 1. But what happened is that once we lost the wave 1 resistance, or once we tried to come back and establish the support, let's say it like that, and we lost that level of support, it then enabled us to continue back to the downside. But what was beautiful about what happened at wave 3 was that we completed the trifecta, since we're using some big words, in which we finally put in point number 3. And so if we do go ahead and we remove drawings at this point, you can see that we somewhat predicted where wave 3 could be because we drew a line from our all-time high back to these November highs down to our new highs. And now we have our trend line. And so although I am extremely excited about the fact that ADA is under $1 and I want to do some accumulating there, you guys know my drill. We are in a downtrend. We're in a downtrend. And until we are capable of seeing this move out of the downtrend, I'm not doing mass accumulations. And it is that simple, right? Now, yeah, sure, we may get a bounce. We may get a move here. But realistically, I am willing to wait this thing out, possibly a 20% move or something of that nature, and allow this thing to regroup itself and see if we can see this break before I start to try to buy it, because ADA could continue to the downside. We could go into the bear market. Okay, we could. We definitely could. And so I need to see this. I need to see that break, especially now that we have the trend before I mass accumulate. It's that simple. Because again, I could have bought as we built up, and I could have bought as we dropped, dollar cost averaging, but none of those would have been good buys at this point because they're all down, right? I want to see the justifiable buy. The justifiable buy comes now that we have a very direct trend line. Very direct trend line. Solana. Currently, what Solana is seeing is a retest of its macro Fibonacci's, okay, in which we put in these lows back here, we put in these highs. Now, mind you, we need to get into a logarithmic scale to kind of see this a little bit clearer. Now, what we can see is that, give me one sec. Okay, here we go. All right, I just wanted to double check something here. Anyway, okay, so, and again, please do remember what we were looking at earlier was our, this is not logarithmic scale, okay? Let's go back here. Boom. What we're looking at earlier in terms of the Fibonacci's, that was your base Fibonacci. These are your basic Fibonacci's just simply based off of the price movement. Logarithmic scale definitely could see a little bit more of a fall. This is in Bitcoin, by the way, just letting you guys know, okay? In terms of Bitcoin, the 618786 level, that's like $10,000 as low as $6,400. Definitely possible, but what you can see is that, you know, it's a little bit more distorted, especially considering the fact that on a logarithmic base, there you know, it doesn't take into account certain aspects that are extremely important. Okay. But in terms of Solana, you know, right, kind of paying attention to this more short-term macro move, if that makes sense. What we can see is that we are currently approaching some very key levels, right? Well, how low can Solana go? Well, I would go ahead and say that at any given point throughout an uptrend, there's always the chance of resortment back to your previous high. In which, once you start to lose some local lows and you start to lose some key levels of support, there is always the chance that you will resort back down to a key level of resistance and try to look to flip it at support. So at this point, the worst case scenario for me at this point is I'd say Solana has a possibility to go down to, you know, $54. Do I think that it will? I don't know. I think the fact that we have an extreme level of bullish divergence says that any turn at this point can likely bounce it back up. I would go ahead and say that it's probably not likely that it goes down this low, but it's possible. And considering the fact that it's possible, especially if we lose $73, I'm going to go ahead and wait to see how we interact with these Fibonacci's. If we get back above $99, I'll pick up a little bit more Solana as it comes back to retest this downward sloping level of resistance. But if we do continue back down, I'm going to be prepared to see this thing work its way back towards the $55 region. And then from there, I am under the belief that this is the minimum level of support. I don't think Solana would go down lower than this before bouncing, and that I would take on this trade. I would take on a big buy here, pretty strong buy here, looking for that break back towards the upside. We almost always resort back to the trend. Okay. So overall with Solana right now, my range is between $98 and $73, and I'm not going to do anything really until we see a move out of there. And realistically, that's just going to be about the only three that I am paying extreme attention to right now, because they're the ones that I think are the most likely to see some return. Now, BNB is always a good option. I'd say BNB is always a good option, and BNB is holding up quite well. I'm personally not the biggest fan of BNB, just personally speaking, but I do like the fact that we are seeing BNB holding up in terms of macro divergences and macro resistance and support. So currently right now, it did seem as if BNB was pushing towards our weekly lows, our macro lows down here. And I'm going to wait to see how this interaction holds up, because considering the fact that the rest of the market has lost its September lows, I think there's a strong chance BNB does as well. And that's why I'm not too interested in doing anything at this exact moment. And we don't have enough structure from BNB just yet to really give a good idea of when I think, personally speaking, a good buy could be. Okay. So realistically with BNB, I'm just going to let this play out a little bit more. Does it come back down to back test this level of support and then continue? It very well could, you know, maybe into some type of bullish flag here, but it really just all depends. And I'm not going to try to do too much until we see that structural establishment there. So overall, guys, yeah, that's about it. That is about it for the ones we're going to look into today. I'm going to do another stream on the public channel later on. I actually will go ahead and I want to show you guys something. You guys know I'm not really the biggest on plug-in stuff, but I'm going to plug it. We're towards the end of the stream now, and I wanted to give you guys all of the content before I did plug anything. But there's a few things that I do want you to be aware of, okay? Share screen here. A few things I want you to be aware of, okay? So What we can see right now, on the screen, there you go. I do have a Patreon. We have about 533 members right now. I have 218 videos, 10 links, 8 polls, 371 images. I post all the time. Okay. Now, not only that, though, one thing that I also do is I actually go in and on the Patreon every single day. I go in about 4 to 5 days a week and I do Patreon only live streams. Sometimes I provide them with a breakdown. So Ada Cardano was seeing growth, and we talked about Elliot's wave theory here, right? Told him we needed to see wave four above wave one. If we didn't, if we saw a breakdown, we would likely see a push to the downside. Of course, that is what happened. But I post some TA, I post, but again, it's consistent. And I do all of these live streams, the live stream I'm doing right now. I do these all the time on the Patreon. Okay. So if you guys want these more often, if you do find the content to be enjoyable, that's it. That's there and that is available. But I'm going to try to do another live stream on the public channel later this week in order to continue to provide those of you who just want to subscribe to the channel with the option to still get the content. Okay. I don't think people should have to pay for content that is very important, in my opinion, right? I don't think you should have to pay for information that could be super beneficial to you. But I think that if you're going to, charging people for extra information and things that definitely can be beneficial but aren't like you can live without it, but I definitely think it's super beneficial. It's there. I think that's very important, and I think people who hold off information from their public channels, that could be extremely important just to keep it for people who's willing to pay for it. It's kind of weird to me. Okay, teach their own. Do what you want to do, obviously, but that's just kind of my opinion. Okay. Now also did want to talk about something. Let's go ahead and do this. Here we go. So another thing we talked about before we do go ahead. I'm just wrapping up the stream at this point. But something I did want to tell you guys about, and I just want to talk about it live for a second. So people don't really realize that like sponsorships on the channels, they definitely can be toxic, but there are some that are really kind of valuable. And you guys know that. So there's a crypto exchange out there named FTX, and FTX doesn't sponsor everyone, right? They only really sponsor people who kind of fit their criteria, people who they think actually provide info and provide value and think that they're actually good creators. And I reached out to them. They actually went through my channel. They thought that the content that we've been making and the growth that we've been doing and some of the things we've been doing were very they were capable of sponsoring the channel and bringing us on board, and they thought that we provided valuable content. And so they're the third largest crypto exchange on earth, and they are actually sponsoring the channel now as of earlier this month, which is absolutely insane. I mean, it is a big moment for me because I think that a lot of the work we've been putting onto the channel is finally paying off. And so I just wanted to let you guys know I do have a code down below. It is a referral code. It's just Tyler Hill, my name. In which if you do go ahead and download it, you can get a whole bunch of different rewards. Do go down, look in the description below. It'll kind of express it to you. You get certain fees off and things like that. But I've been personally moving all of my purchases and everything I'm doing over to FTX. I just think it's just too easy, right? I mean, the realistically buying like something like Solana, for example, on here takes maybe like 10 seconds. You swipe it. They also provide some portfolio tracking in which you can, in the app itself, once you make a transaction, you add that transaction to the portfolio tracker, and it lets you know the progress that it's making, and it lets you know how it's going forward. Are you losing money? Are you making money? What your average cost is? All of these things are super, super good. They also offer things if you become a pro on the app. You get some charting software. You can set limit orders. You can look at the charts and some of the candles on the app itself on your phone, which is so much better than Coinbase, in my opinion. Um, all of this stuff, it's there. It's an option. So if you do want to go ahead and use my referral code, again, it's just Tyler Hill. Please do go down in the description below. It would be huge for me, of course, because it does kind of help with my sponsorship and my side of things. But it is something that I've personally been using. They have a bunch of other things and a bunch of other rewards and things in which you can do on the app to earn passive income. So definitely do go check out how all of that works. But I just wanted to let you guys know that that was a huge moment for me, and I'm very happy that we've gotten to the point where like people like them take us serious, right? They know that we bring this value, and that as time has gone on, right, as we've been putting in work every freaking day. I've posted 650 videos, and as we've been going forward and we've been putting out these videos, and we've not been bullshitting. I know I got clickbait titles here and there, that's just the kind of the name of the game, but the info I'm putting out there is what I believe to be valuable in some type of way. Maybe not super valuable, but valuable at least. They agree, and the fact that we were able to do that was a huge moment. And so I just wanted to thank you guys again. I definitely just wanted to thank you guys again, and I hope you guys do go check them out using my promo code down below. So with that being said, guys, that is going to be about it for today's stream. About an hour and 20 minutes of just info and content. And I hope this is something that I hope this is something. Yeah, the link is down below. Go look for it. It says it's hold on, I can show you. It is this one down below. Oh, give me one sec. I gotta go at it. I gotta go at it. I gotta go at it. Hold on, hold on, hold on, hold on. I forgot I'm on live. I'm not. I don't have my basics. So basically on YouTube, you can have like a basic description set for every video you post. I'm gonna go add the link right now. There we go. Look at me plugging a link that ain't even there. What an idiot. All right, here we go. I'm gonna just add this just in case anyone wants to go ahead and check it out. All righty. It's gonna be the very first link in the description. One sec. But again, guys, we're probably about to wrap up this here stream. But again, it is the very first link in the description down below. All right, it is now added for anyone who does want to use that. Again, it's the one that says Blockfolio on it. So yeah, so overall, guys, that is going to be about it for today's stream. I hope I provided some info for you, and I hope I kind of broke this thing down in a very easy to understand way. My goal on here is to kind of just cover everything. And when I do live streams, I have a lot more time, and I feel like I can really put more effort and energy into the content and the info rather than trying to get it out fast. So if I did provide you with some information that's beneficial to you or anything, of course, all I ask for is if you can just like it so more people see this. The more people who do like this during the stream, it'll show it to people after the stream ends, and I'll get like suggestions and things like that. The more people can see it. If that was beneficial to you, of course. If not, dislike it or message me or whatever. It's all good. And yeah, so that's gonna be about it. Not sure if we're gonna post today. This is what's important. I don't really want to do too much TA on Solana or ADA or Matic or Mana or any of those other ones right now, realistically, because Bitcoin is what's important. It's controlling the market, and all of this information is where the focus needs to be, not on the other shit. And so I'm not sure if I'm going to do another video. If I do, I don't know. We'll see. Patreon members, if you are in here, I will be in the Patreon right after this. I'll be answering questions, doing anything that you need. So message me if you want to see TA on anything specific. And yeah, other than that, that's going to be about it. Do be looking forward to another public channel stream from me soon. And again, if you do want streams from me like this just about every day, go check out the Patreon as it is provided down below. As you're on the way out, if you could smash that like button, that would be super, super, super beneficial. But I'll see you all next time. And I gotta hold on, wait. I want to do the really cliche Tyler Hill investing thing. All right, bye.